and get going with the show. And for that, we are now joined by Lakshmikant, Shukla, who's a technical analyst, institutional research. Yes, Securities, who's now joining us on the technicals. Hi, Lakshmikant. Thank you and good afternoon to you. And thank you for joining us on the show. Let's get going with the show then. The first stock that is in focus today is Angel One. That share has fallen over 5% as company's gross client acquisition in November fell almost 17% on a year-on-year basis to 5 lakh, but the client base increased to almost 22% from the year-ago period, 35.08 million as per the exchange filing. And the stockbrokers' numbers of orders dropped 10% on a year-on-year basis to 117 million in November, while the average daily orders also fell 15% on a year-on-year basis to 6.2 million. Now, based on the option premium turnover, its overall average daily turnover for the month increased nearly 98% on a year-on-year basis to 1.87 lakh crores, but the average turnover from the futures and options declined 5.4% to 14,000 crore rupees. And based on the option premium turnover, the company's overall retail equity market share increased by 18 bips on a year-on-year basis to 20.3%, while its futures and option retail market share fell 46 basis points to 21.5%. And the commodity turnover market share declined 719 basis points to 52.5%. And on the back of that, weak operational numbers, Angel One is declining away in trade.
All right, so Angel One declining in trade today, but moving on to the next counter that Lakshmikant you've picked out for us, Indus Towers trading pretty well on a day when the market is not doing all that well below that 26,000 mark, where Indus Tower holding with gains of more than 1% right now. In the short term, what do you see on the charts for this one?
Good afternoon to both of you. So Indus Tower has recently seen consolidation breakout on the upside. From last few days, it has been trading below its key moving averages, but today it has regained momentum and also found strong support from its 20 DMA levels. So I think further breakout could be expected of the levels of 414. Once it taken out this level, then after it will continue its upside move toward the levels of 430. So that would be the expected target in this tower. Even one can go long at current prices also, as risk and reward ratio is looking favorable. One can keep the stop loss of 395 and till it hold this level, we could expect this breakout on the upside and can expect the target of 430 in the short.
So 430 is the target that you should be looking at as far as Indus Tower is concerned. But Citi has also come out with a note on Indus Towers, and it has set the target price as 500 over the long term. Now this after a bullish call that Citi has given, it has reiterated its high conviction buy rating and placed it on a positive catalyst watch. And like I said, maintain the target price of 500 rupees over the longer term. The optimism is tied directly to the government's signals around Vodafone Idea's relief package that we saw yesterday. Our Telecom Minister Jyotiraditya Scindia has also indicated that the contours of the support plan could be finalized within the next few weeks, with a possible announcement coming very soon. Now, Citi has highlighted that once the AGR relief is granted, Vodafone Idea's leverage, excluding government use, is actually quite low. So coupled with improving cash flows, this news development finally could allow VI to raise new debt and stabilize operations. Now for Indus Towers, which relies heavily on Vodafone Idea as a tenant, this reduces uncertainty around receivables and future tenancy. And Citi says that the improving visibility makes the current valuations a compelling buy opportunity for Indus Towers, and hence it's a buy. It's on a positive call coming from Citi as well, and hence stock is up more than 1% right now.
All right, moving on to the next counter that's in focus, and that is up and away almost 3.5% in the trading session, and that's DOMS on the back of an antique note that is initiating a coverage with a buy rating and a target price that's set at 3,250 rupees. Now, they feel that the company is well poised to grow at a faster clip in the overall consumption space. Now, the healthy growth of 25+% is expected to continue over FY25 and 28. The capacity bottleneck addressed through Greenfield and the Greenfield capex and the huge scope for distribution expansion. Also, the EBITDA and the return ratios are likely to remain in the guided range, and they expect DOMS to deliver healthy revenue, EBITDA and PAT CAGR of 21%, 20% and 21% respectively over FY25 and 28 estimates. And also they're expecting an ROE and ROCE of 22 and 26% respectively by FY28. On that positive bullish note, DOMS is firing on all cylinders with gains of 3.5%.
Right, so that's DOMS up and away 3.5% in trade today. But moving on to the next counter that Lakshmikant has picked out for us, Siemens Lakshmikant. Decent day for Siemens, but very muted trade it has seen in the past year or so. In fact, in the past month, it has seen good 7% gain, but otherwise very muted trade in 2025. What do you see on the charts as we just are about to enter into 2026?
Yes, in today's session, we are seeing some muted action from the Siemens. But if we look at the structure, it has found strong support from its key moving averages. Even we have seen positive crossover within 150 DMA. In yesterday's sessions, it has given 3 to 4 days consolidation breakout. And if we look at the RSI, so it is also trending higher. So I think that this would be the call for taking long at current prices. So one can buy around the levels of 3,330 to 3,340 and can anticipate the upside target toward the levels of 3,540 in the short to medium term, while support is seen near the levels of 3,230. So I think till it maintain this upside posture above the levels of 3,230, we can anticipate the target toward the levels of 3,540.
3,540, that's the target to watch out for as far as Siemens is concerned with the short to medium term. But moving on, let's also put the spotlight on Sun Pharma. This one is in focus after announcing a major expansion move. Now, the company's subsidiary has revealed that Sun Pharma Laboratory, that is, will invest 3,000 crore rupees to set up a greenfield formulation manufacturing facility in Madhya Pradesh. Now, this proposal has been approved by the subsidiary's board. In addition to the big capex announcement, Sun Pharma has also launched its globally successful Proasis drug in India, and this innovative biologic is widely endorsed by dermatologists worldwide and is used for treating moderate to severe plaque. So yes, on the back of both of these developments, the stock is in focus today. However, it has given up all of those morning gains and is right now trading just about flat, but with a negative bias.
All right, moving on to the next counter that Lakshmikant has picked out for us. You've picked out one from the IT pack. IT pack that is the only shining beacon in the trading session today. That's the top sectoral gain and the only sector that's in the green right now. Infosys is what you have picked out for us from the pack. Tell us what are the levels to watch out for an Infi.
The Nifty IT has been outperforming in today's sessions, and it has been making higher tops and higher bottom for the last few weeks also. So it has rebounded quite well from the lower levels. Even if you look at the chart of Infosys, so we have seen decent upside move with the formation of bullish candle on the daily chart, and even RSI has given bullish crossover on the daily scale. MACD is still trading on the positive side, so we expect that this positive pullback move will continue in Infosys, and that's why we have recommended this stock around the levels of 1,570 to 1,575. So that would be the buying level for the Infosys, and one can keep the stop loss of 1,530 and can expect the upside move toward the levels of 1,665.
All right, so that's Infosys on the charts, but let's move on to the next counter that's trading, that's doing well today is Chalet Hotels. That is in focus in the back of a note by Jefferies that's maintaining a buy rating with the target price of 1,070 rupees. And they feel that the management has reaffirmed metro dominance at its analyst meeting, citing institutional partnerships, mixed use expertise and industry leading focus. And also Chalet is focused on big box city assets and leisure properties complemented by selective commercial RE. The company will balance brand tie-ups with the selective rollout of Athiva. Now, management also opined that the net debt to EBITDA is comfortable with good opportunities to grow. On the back of that, Jefferies is maintaining a buy call and Chalet Hotels is up in a way more than 2.5% in trade.
All right, so that's from the hotel space. But now let's shift focus to the auto sector. Maruti Suzuki yet again in focus. This after it has announced EV charging initiatives. It's called One India, One EV charging platform. Now remember, the company has rolled out a full digital ecosystem for EV users, covering home charging, public charging and seamless payments through its E4Me app. Now, Maruti Suzuki has also partnered with 13 major charge point operators that bring thousands of chargers onto one unified platform. The company already has 2,000 exclusive charging points across 1,100 cities and plans to enable over 1 lakh public charging points by 2030. Now, this ahead of its launch of the E-Vitara, and that has also been flagged off from Gurgaon towards all four corners of India. Now, this E-Vitara, tested across extreme temperatures, delivers a range of 543 kilometers. In fact, my colleague Samir was at the launch and he caught up with the management as well. So let's take a look at this exclusive conversation and all the features of the new SUV E-Vitara.
Entering late but entering with full readiness, and this is the motto adopted by the ace auto player Maruti Suzuki. So Maruti Suzuki has showcased, has given out the details of its electric mobility program, that how they are looking to further penetrate in the EV space, and that's the logo of the electric mobility of Maruti Suzuki. So they have come up with a detailed roadmap. Maruti Suzuki is going to invest heavily, roughly around 250 crore for building the robust charging infrastructure across the country. They have set an ambitious target to get 1 lakh charging stations across the country by year 2030. And even till now, Maruti Suzuki has already got 1,000 plus charging stations over 1,000 important cities across the country. Not just this, Maruti Suzuki is eyeing to have 1,500 EV charging workshops or the service centers across the country, and more than 150,000 trained or the skilled manpower will be ready for this ambitious target as well. Now, why Maruti is focusing so much? Because they understand that they are entering a bit late in the EV space, but with full readiness, they will be able to not just compete with the competitors, but also to have a very strong presence as well. And this presence will be established by the the electric Vitara, which is all set to go for launch in January 2026. But Maruti has said that very soon the bookings will be open, which means that maybe in the month of December itself, we can see that the bookings of electric Vitara will be open. Now, that's a very important achievement that electric Vitara has got, that they have got a 5-star Bharat and CAP rating. That's a safety parameter. 5-star is the highest level they have gotten. 7 airbags is going to be standard for all the variant, which is a very important aspect when it comes to the safety part. In addition to this, Maruti has said that they have already received this certification from ARAI testing agency that this vehicle is going to have a driving range of 543 kilometers, which if you calculate, suppose you are going from Delhi to Chandigarh back to Delhi, then you need not to have a charging station for this purpose. So that's very important for Maruti Suzuki to come up with a SUV, a very impressive SUV. If you see, that's bold, stylish, with the alloy wheels, with a very masculine kind of a structure. But yes, coming up with very important safety features. And in addition to this, before rolling it out, Maruti is ready with a very robust charging infrastructure as of now, and a detailed roadmap ahead as well. With camera person Dilip, this is Samir Dikshit for ET Now.
2030, we are looking for 1 lakh chargers across the country. So we will be the largest fast charger OEM network in the country.
And going to invest quite aggressively?
Yes, we have already invested 250 crores and furthermore we are going to do in this.
Suppose I'm a customer of Grand E-Vitara. What can we expect? E-Vitara. So what can we expect from the play? I mean, in terms of the mobile app that you are suggesting, it's going to be one-stop solution.
Absolutely.
From that perspective.
So it takes care of all your needs. Wherever you're looking for discovery, even the payment you need to do, everything will run through that app. Okay. You don't have to look for any other app. All the CPOs, 13 CPOs have come under our umbrella. One India, one app umbrella. And we are trying to give that convenience to the customer that you don't have to go anywhere. If you come to us and at the same time, the number of chargers which you are putting in our network, we have a huge network. We are leveraging our network. So a customer, today we have flag of 4 vehicles to the 4 far corner of the country. Kanyakumari, Bhuj, Kaziranga and Srinagar. Just to demonstrate to the Indian customer that what is the level of preparedness which Maruti is doing. Even we are not starting the sales, we are very good to start the sale. But first we want to win the confidence of our customer. Then only we will start the sales.
All right, moving on then from Maruti's new launch, new offering to the IT pack, Lakshmikant. You picked out TechM for us. Lakshmikant, TechM is one of the names that has not done much, but it's just in the last few weeks, say a month or so, that we have seen some movement on TechM. From here on, what are the levels you see TechM scaling?
Yeah, TechM has given double bottom breakout few days back, and then after it has started moving higher. 3 days back it had also reclaimed 200 SMA levels. So now we expect that this ongoing move will continue. So I think that would be the current level will be the good level for taking long position in it. So one can buy around the levels of 1535 to 1540 and keep the stop loss of 1490 on the downside, where its key moving average is also placed. So from there we will see upside move in the stock and can expect the target around the levels of 1640 on the upside.
All right, so you could expect target of 1640 for Tech Mahindra. Well, that was the last talk of the day, but with that, we're completely timed out on this show. And Ankita and I will take your leave, but don't go anywhere. Closing trades coming up next.